Right, let's get into the big one. Genesis and St Barbara, the term sheet is out for the new deal. They've obviously signed a new one. Now, what is it? Genesis are proposing to buy the Leonora assets off St Barbara. So the Hoover House and Phoenicia Metal things won't be happening anymore. It's no longer a thing. That was in the first deal last year. It's a $600 million deal, this one, for St Barbara. So it comprises of $370 million in cash, $170 million of Genesis shares given to St Barbara shareholders, and up to a further $60 million worth of Genesis shares that are contingent on the first ore production from the Tower Hill mine. So for this, Genesis are raising $450 million compared to the $275 they were raising in the last deal. Right, Trav, mate, I know you've been heavy in the computer on this, and we haven't, as said, we haven't got enough information yet. The announcements aren't out from St Barbara or Genesis. It's purely on the term sheet. Trav, let's get into it. What is going on here?
I think I'll start with the disclaimer that this is pretty early stage, and all we've done is taken a look at a term sheet that's floating around at the moment, and this term sheet is ultimately just going out to fill the placement in order to kind of, and that's one part of the deal is the equity raise, and the rest of the deal is sort of all interconditional anyway. So there's a bunch here, Maddie. My first comment is this seems a lot simpler. In essence, Genesis, they're acquiring a project or projects instead of a company. And the reason that to me is a bit simpler is because the big uncertainty floating about there in the market is a lot to do with what St Barbara's working capital situation is. And if as an outsider looking in, I tend to think that if you're acquiring a project rather than assuming liabilities of a company when you merge with them, that to me feels a lot cleaner. So, there might be some benefit there. To really get to the crux of whether or not this deal, who it benefits and how much it benefits each party, you really need to do some solid math on what the pro forma companies are each looking like and what sort of each company is going to be getting. And to really be able to do that analysis well, you actually need to have a good understanding of what the current liabilities are of St Barbara that would have been part of Hoover House. And I think it's that number there that's not out in the market that is really informing the recut of this deal right now. So from what we can see, this deal to me looks like a good deal to existing Genesis shareholders. It looks like a good deal to new coming equity participants. And it looks like it basically looks like, a bad deal for St Barbara, but it also feels like they had to do it. And
why would you say it's a good deal for Genesis, bad deal for St Barbara? I know it's hard to sum up, Trav, but can you line it up?
What I'm looking at when I'm trying to figure out if it's a good deal for Genesis is I'm really just looking at what pro forma ownership of the Leonora assets are they going to have by doing this deal. So in the first deal that went to the market back in December, Genesis shareholders, the existing Genesis shareholders, were going to end up with 41% of the Leonora assets, but they were also going to end up with a very small amount of non-Leonora assets because Hoover House would have a 20% shareholding of Phoenician. So existing Genesis shareholders would have ended up with about 8% of the non-Leonora assets if you do a see-through value.
Which I assume there's not much value attributed to those assets in their current state, very poor performers.
It would appear by the way that this deal has been structured, by having a spin out, that there are certain assets that are probably of interest to Genesis management and certain assets that wouldn't be of interest to Genesis management. And that's typically why you would do this, merger and demerger sort of structure in the first place. Before Genesis shareholders were going to get 41% of the Leonora assets. Now on a pro forma basis, they'll end up with 43.5%. That's undiluted for the contingent shares that might ultimately be converted to shares. The real number though that's not included there is actually just what level of liabilities would be assumed by the Genesis shareholders by virtue of the fact that they're now taking on whatever St Barbara's liabilities are going to be, because it was ultimately MergeCo was there's some pay down of some debt there, but there's also a creditors list that we can't see, which might be substantial, and it's been a while since these companies have reported financials. So
for St. Barbara shareholders, I know they triggered that, was it $150 million debt? That was the point that was the original merger was contingent on that they didn't have debt exceeding 150 million. So
I think it was a bit higher than that, but ultimately the scheme was conditional on this debt threshold, and they haven't breached it yet. But it seems like the deal was recut because it looked like that could be a possibility.
So say they've got $150 million of debt, just to pick that number, they get this $350 million of cash from Genesis. Would that then possibly leave them with a $200 million net cash position, or not as simple as that?
I think it's not as simple as that. The reason I think that is because if you look at the last deal, the last deal was Genesis is raising $275 million, right? And in the use of funds for all of that, at the end of the day, only $70 million of that was allocated to Gwalia and Tower Hill. So when I looked at that deal, and of course some of it was to set up Phoenician and Phoenician's plans and all that sort of stuff, but I kind of, my impression was that the reason you were raising so much money there is it kind of, in some ways was solving a bit of a cash flow problem for St. Barbara that they were experiencing across their portfolio. And some of that was expansion, and some of that might have been working capital. The mix to me was a little bit unclear. And now the deal is not raising $275 million, but it's raising $450 million. And how much of that is going to St. Barbara in cash? It's $370 million. So to me, it now feels like the number, the cash number that actually kind of back solves everything, if there are sort of some cash flow issues, is higher. However, in the process of that, the cash is higher, but St. Barbara are basically getting a much lower pro forma percentage of Leonora by virtue of this recut deal as we see it. The term sheet floating around has the fact that St. Barbara is going to get shares in Genesis, and those shares are going to be to the tune of 15% of Genesis on a pro forma basis. But with the contingent piece, when that sort of converts, they'll end up with a 19.9% shareholding of Genesis. So if you think of Genesis as the pro forma entity with the Leonora assets, St. Barbara shareholders are only going to get 20% of the Leonora assets. Before, in the first deal, they were going to get 38% of the Leonora assets. So that's a massive reduction in the exposure to the Leonora assets on an ongoing basis. And I think that's kind of the price that's been paid for what sort of eventuated in the intervening time since the first deal, and that was flagged to market by St. Barbara earlier, that we covered earlier.
So that, and it was also in the term sheet that 13% of that, so 13% of the total, 15% of Genesis equity that St. Barbara shares will be distributed to St. Barbara shareholders. So leaving I think it was 13%, leaving 87%. Say, is there limitations on the St. Barbara shareholders that get those Genesis shareholders on? Is there limitations on being able to sell those immediately? Is there ever conditions like that?
There are occasions where a company intends to do an in-specie distribution, but they can't because the shares are subject to an escrow, so they have to be held for a while. In this case, that doesn't appear to be applicable. I think this is just a case that the interesting part of that, though, is that St. Barbara intend to keep 87% of their Genesis shareholding. So St. Barbara is going to look like a pretty funny company at the end of this. They're going to have Atlantic, they'll have
Simberi.
They'll have Simberi, they'll have Catalyst shares, they'll have Kin shares, they'll have a royalty portfolio, but mainly they're going to have Genesis shares, and they want to keep that. So I can see the Genesis shares as a potential funding lever for whatever expansion plans or whatever plans they might have in the future. But the big question mark for me in St. Barbara is how much cash are they actually going to have once they sort of pay down their debt and pay down any liabilities that they might have accrued that we don't know about yet. That's the big unknown. And I think until more announcements are made to the market, that will remain a little bit unknown.
I think it's also worth mentioning that this huge raising can't go ahead without approval from Genesis shareholders. There'll be a couple tranches, and it's going to be a number of weeks or months still before the deal's wrapped up.
Exactly right. So the first tranche is $50 million and the second tranche $400 million. So, and I'm sure that part of that is basically converting RCF and AusSuper's previous cornerstone contributions into that second tranche, I imagine. So the other part though is like if you're a new equity shareholder into this deal, would you have been happier on the first deal that came to market or the second deal that came to market? And I think on my take on that is that I would actually be happier with the second deal that's come to market, mostly because it's just a cleaner support for RAL in my mind. It's a much more distinct break from whatever the St. Barbara's kind of issues might be, and on my math, they're getting roughly about the same deal. If you kind of just work out per $10 million invested, what pro forma percentage of the Leonora assets are they going to get? Well, it works out by my math to be slightly higher, and of course those new shareholders aren't getting any entitlement to the non-Leonora assets. But I think they would be comfortable with that, because if you're investing as a new equity shareholder, the plan here is you just want to back Raoul on his plan to consolidate Leonora and make a lot of money and do Saracen 2.0. You're less interested in any kind of kicker that sort of comes from a Phoenician IPO with assets you don't care too much about, and that clearly seem to be a bit of an issue for Raoul, and hence why he's tried to chop them out by the demerger before. So I would be happier with this recut of the deal if I was a new equity investor.
And I think just backing great management teams has been a pretty good strategy for a long time, and in particular in the mining space over the past few years, we've seen that.
So he's essentially still becoming the same machine, still becoming a possible 300,000 ounce producer. Nothing's changed there because
they're getting what they want.
They've taken away the Phoenician Metals interest, that whole things, and they don't have St. Barbara in there with them. He's got, I guess, full control now. So it's, as you said, a lot cleaner, a lot simpler. Looking at the assets, they'll still be transporting the Tower Hill dirt all the way to the Mount Morgan's mill. That's a 100-odd K trip. Look, everything still seems to be the same.
And the deal's going ahead because Genesis wanted it to. I think that's why it's been recut.
100%. So it's obviously there's stuff unfolding in terms of just understanding what the liabilities might be or might continue to be at St. Barbara that is worrying, and this new deal protects Genesis shareholders from assuming those liabilities.
Why wasn't this the first deal?
I imagine that there's been a lot of permutations of this deal over the course of trying to bring the two companies together, and there might be a bunch of different reasons why you would choose the merger and demerger sort of scheme in the first place.
But I think St. Barbara's hand has definitely weakened over the past 5 odd months.
Absolutely. The other interesting thing in my mind that we should talk about a bit is that, and this should factor into people's analysis of how things pan out, is in the deal that came to market last time, the conditional placement, $275 million was to be raised. $70 million of that was to go towards Leonora. So there was $50 million for Gwalia future proofing and $20 million for Tower Hill. And in this new deal that's come to market, the $450 million equity raise, in the use of funds, there is no attribution to actually use any of that for Leonora. So the other thing we should keep in mind is that the pro forma Genesis is going to be less capitalized to actually deliver to start developing Leonora province in the way it wants to. And it might have to seek additional funding in order to have the same level of planning for those assets. So if you're doing some like for like basis math, you might actually have to add some further equity dilution to account for that. But the other thing that they avoid though is in the previous deal they were assuming $50 million of St. Barbara's debt, which is no longer happening. And I imagine they would have been assuming liabilities outside of the debt, which they're no longer doing. So all of this stuff matters, and we don't have clarity on what the real numbers are, so we can't give a very granular response yet.
If you've got to look at the newspaper headlines in 3 years, whether Genesis are up or down, and you look back to the mere fact that you say, right, Genesis paid $600 million for Gwalia, Tower Hill and the mill, do you think it's going to be that was a good deal or they paid too much?
To start with, I think let's be careful in using the word $600 million because I'm always apprehensive about adopting the headline numbers that are put out to market, because anytime there's contingent consideration, you have to factor in the probability that actually gets vested. And in this case, it sounds like Tower Hill is part of the plan, so it ultimately will be vested, I imagine. But I'd rather use the words $540 million plus $60 million of contingent consideration, which might only be valued at $30 million if you were to seek fair value for it. You've got to times it by the probability.
Or if they don't achieve ore production from Tower Hill, you would say, yes, that was a bad deal.
For sure. Oh, wow. $600 is a price tag. Again, you'll be able to measure that pretty clearly by the Genesis share price, I imagine.
And I think cost of operation is going to be the big driver in success for this. You're trucking over 100 metres to 100 kilometres to the Dacian mill. You've got high cost of getting the dirt out from underground. I see managing costs going forward as a big thing for Genesis, assuming this all goes through in both tranches, but plenty to look at.
Yeah, and it's a fascinating dynamic for Genesis as well, now having St Barbara as their major shareholder. Is their ownership in you going to be used as a funding lever?
But if they then have funding issues later on or financial issues later on, is there a risk that they will then dump their shareholding, or will there be the escrow conditions to prevent that from happening?
It'd be a strange move to on-market dump a pretty liquid stock that has good institutional appetite. So anything that would trade there would probably happen via some crossing.
Now, what about Red 5? Last bit of this, Red 5. I know they're Saracen-owned King of the Hill, did a trial underground, sold it, didn't work. Red 5 have had dramas. The Red 5, the King of the Hill mill is 40 k's away from the Tower Hill project, in contrast to the Dacian mill, Mount Morgan's mill, that is over 100 k's away. Pretty sure it's over 100. I looked on the scale. Do you think that's still in play, possible for total consolidation of that Leonora area, or do you think you'll sit at this?
I think their hands will be quite full for the foreseeable.
Who knows? To be honest, like if you had have asked me, would I have predicted that Genesis would acquire Dacian? I would have said no to that. But what happened was Dacian became extremely cheap very quickly, and RAL acted on that. And I think every asset probably has a price, but you never know.
Never know. Right. Thanks, Abe, for all that, lads. Great research, Trav. As I said, great research based on minimal information so far. So we look forward to next week receiving the official announcement. I guess, and everyone's waiting to see, as I said, what the liabilities are, but what RAL's plan is going forward for Genesis. Is he surgically targeting high grade at Gwalia, things like that to make this flow? So